How's it going, everybody? It's Stas here. So in this video, we're going to be breaking down the top 10 stocks that I'm looking to buy heading into this week in the stock market. And I also want to break down what the futures are looking like when it comes to the S&P, the Dow, and the NASDAQ. And in general, what happened last week in the stock market, taking a look here at the S&P 500 so we can break down some technicals and maybe try and see where the markets could be going over the next couple of days. So a lot to talk about in this video. If you guys find value in it, as always, hit that like button for me, consider subscribing to the channel, and check out all the free links down below in the description box if you want to be further connected with the Strive Smart community. And if you want 2 free stocks from Webull, one of them valued up to $1,400, again, check the links down below in the description box. So let's just start off with the S&P 500 here, taking a look at the 5-day, 5 minutes so we can see what happened last week. And by the way, last week market was closed on Friday, so this data does include 1 day from the previous week. So you guys can see S&P 500 went from 3070 down to about 2999, and pretty much all of last week the market was ripping. S&P 500 from roughly $3,000 and went all the way up to 3165, and it ended up closing on the 180 SMA here right above the 3120, pretty critical level of resistance, or rather support, heading into the long weekend, which is very bullish in my opinion. And what did we get last week? We got jobless claims numbers, which at this point, we know the market hasn't really been reacting to those because it really expects the jobless claims numbers to be pretty bad. I mean, we've had 15 weeks in a row with over 1 million people filing for jobless claims, and of course, it's been lowering over time. I mean, we started off in the beginning of the crisis around 6 million, 7 million people filing for jobless claims, and this past week, let me just double check my notes, I think it was around 1.427 million. And the real big piece of data that we got last week, or on Friday, was the jobs reports, the non-farm payroll jobs reports. And this was projected to be around 3 million in the month of June, right? We were projected to get 3 million jobs added in the month of June, and it came in at 4.8 million jobs. So it completely blew out expectations. The unemployment rate actually went down to 11.1%. I believe it was expected to go down to about 12% in the month of June. So we blew out jobs numbers and the unemployment rate, and that's pretty much what ended up popping up the market on Friday, right? And at this point, we'll take a look at the futures in a couple of minutes, but at this point, when it comes to the S&P 500, let's pull up this 20-day chart. I'm looking at 3120, again, like I said a minute ago, that is where we ended up closing on Friday. This is very good because if you guys see, 3120 was a resistance back on the 1st of July, and if we pull back on the 4-hour chart, you guys can see 3120 was a resistance back in March. It was a resistance back in November, December, right? So it's a pretty pivotal point when it comes to the technicals here on the S&P 500. So if we hold this tomorrow, next week, or rather this upcoming week in general, I'm looking to see if we're going to gap up and break out of 3150, right? And although the bulls are in charge, no doubt about it, the bears do have, what's the right word here? They have a bit of leverage, right? The bears are getting really... You can see the bears, I don't know what chart to pull up here. Let me pull up this 20-day chart. You guys can see the bears have been coming in right around 3150 ever since the middle of June, right? And that's what I mean by they have a bit of leverage here. So the bulls need to break out of 3150. Again, a resistance from the 15th of June, the 16th of June, the 19th, the 22nd. These are all time periods where we failed to break out. And honestly, on Friday, we broke out momentarily above 3150, but we did not end up closing above it. You guys can see we dumped right after we broke above it momentarily, and we tested it again in power hour 3150, but we failed to break out of it yet again. So for this week, watch that break above. If we do break out of there, the bulls are going to take us up to 3,200. At least that's what I think, right? 3,200 is this next main resistance, 3,230 to be exact. And from 3,150 up to 3,200, that gives the S&P about 2% upside if it does end up filling that trading range. So is it going to fill the trading range, guys? I don't know. Nobody knows. Nobody has the crystal ball. But what I'm personally looking at here is the stock market futures, right? The S&P, the Dow, and the NASDAQ to give me some sentiment. Okay, what are we going to be looking like heading into the market tomorrow morning and throughout the night, right? Because if the futures are heavily in the green heading into tomorrow, large caps are green. A lot of the stocks are green in the morning. That means, yeah, the bulls are taking control and we might break out of 3,150 and so forth and maybe fill the gap up to 3,200. But if we see the futures bleeding heading into the night, into tomorrow morning, large caps are red, we might honestly break 3,120, which that would not be good for the bulls whatsoever because, again, that's a pretty big support right now. And if we pull the 5-day, 5-minute chart up again, that's a place where the 180 SMA is meeting the candlesticks here, and we might be selling off down to, let's say, 3,100, 3,070, 3,080 if that level does end up breaking. So the futures right now, I mean, they're pretty much break even. S&P 500 futures are literally down a quarter, down 0.01%, so not much movement there. The Dow futures are up $3, up 0.01%, nothing there at all really either. And when it comes to the NASDAQ, the tech-heavy index here, it's the only one that's moving a little bit here, up 21 points, up 0.2%, but still, that is not much movement at all either. So at this point, guys, keep an eye on those main levels. Keep an eye on those main levels. And just keep an eye on these futures heading into the morning, throughout the night, and especially pre-market. And in general, what's the sentiment surrounding, the futures, the large caps, and the pre-market session, etc. That's kind of what I'm looking for in terms of determining, okay, are we moving bullish or are we moving bearish, at least in the beginning of the week? So let me know down below in the comments, what are your thoughts on the market? What are your thoughts on the jobless claims numbers, the non-farm payroll numbers, and in general, where we're going over the next couple of days when it comes down to the stock market. Now, let's talk about some stocks here. I have 10 stocks that are listed in my notes that I want to go over with you guys. The first one being good old WKHS, also known as Workhorse Group, and no pun intended, this stock has been a workhorse. This thing has gone from $1 back in March. Now it's trading at $22. And on July 14th, this is a very big day for this particular company. And many investors, many traders too, quite honestly, are loading up into this stock in anticipation of a massive deal here with USPS. So I have a lot of notes here that I want to go over in regards to Workhorse Group and this deal in particular for those of you guys that don't know. So bear with me here. The deadline for bids was supposed to be March 27th. So Workhorse is looking to grab some of USPS's new or this contract, right? There's a contract. They're looking to potentially partner with a couple of different car manufacturers, van manufacturers, whatever you want to call it. And they're looking to grab part of this. And if they do end up grabbing part of this deal, they're going to have a lot of vehicles produced for USPS. That's pretty much what that means, right? And again, the deadline for the bids was supposed to be March 27th for the bids for this contract, but it is now July 14th, which is not this week, but I believe it's the beginning of next week, according to USPS. The program could award up to $6 billion in contracts to one or multiple bidders, and it's expected to result in the manufacturing of nearly 200,000 new mail trucks. Some of the bidders have been working on all-electric versions like Workhorse, WKHS. Others have explored hybrid options, and a joint effort from Ford and military vehicle manufacturer Oshkosh is working on a gas-powered version. The program to replace the USPS's current trucks was launched, get this guys, 5 years ago, 2015. So this is 5 years in the making that USPS is trying to replace these old trucks and then just bring in, whether it's Workhorse, Ford, one of these four companies' trucks. But it has dragged on, right? And this is forcing the Postal Service to keep its current trucks in service past their expected lifespan. So needless to say, they are in need of new trucks, guys. So this is going to happen literally in the next couple of days here. In the next 10 days, we're going to know what happens, right? Whether Workhorse gets 75% of this 6 billion of these 200,000 vehicles, whether they get all of the vehicles, right? And get this, these old USPS trucks, they were from the the late 1980s and the early 1990s, and they lack features such as air conditioning. What the heck? And 2 of the original 6 companies that were supposed to be bidding for this dropped out. So now it's down to, again, Oshkosh, Ford, at least from what I have here, WKHS and 2 other ones. So that is pretty much what I'm waiting for here and what everybody's waiting for when it comes to Workhorse Group. If they land this deal, guys, 75%, 80%, 100% of this fleet, this stock is, a lot of people are saying it's going to go to $30, $50, $80, right? And as always, do your own research, do your own due diligence. Do not buy anything based off my opinion or anybody else's opinion out there. I'm just telling you guys what I've been researching, right? And the flip side of this is if we get some negative surprise, I don't think it's going to happen, right? But by negative surprise, I mean, let's say they don't get a deal, they don't get 75%, 100%, or they get significantly less than what people are expecting. Maybe let's say they get 20, 25%. Who knows, right? I'm just looking at different scenarios here. That could be very negative, I'd say, at least for the investor sentiment. For the company, I'd say that'd still be good. That's a step forward for this very small company at the end of the day, being around a $1.9 billion market cap at this point. But for investors that are pricing in 75%, 100% of this deal, that could be a big disappointment to the point where this stock could go from $20 down to, let's say, $10, $15. Who knows, right? That could happen. And again, I'm just spitting out a couple of different scenarios here. So that's kind of what's going on right now with Workhorse, kind of what people are waiting for. And when we're looking at it on a technical basis, $20 held heading into the close on Friday, or Thursday rather, which is very good, right? That's an old resistance from back on the 30th of June. So that's a good sign that we held that. So for this week, if we don't hold $20, I think $18 is the next price target, right around that 50 SMA here on this hourly chart, right around pretty much where we've been bouncing off of when it comes down to this stock, right? Every time we've pulled down over this rally over the past couple of weeks, we've held that 50 SMA, right? So again, if 20 breaks, watch for that 50 SMA right around 18 to about 1850 here on the hourly chart. And let's say we don't break, right? Let's say we hold $20 tomorrow, in the pre-market, heading into the market open. We end up gapping out of both of these moving averages, the 50 SMA, 180 SMA here on the 5-day, 5-minute chart. That would be very bullish, right? If we do something like this. At that point, I'm thinking, okay, we might be, going up to test $23 and maybe even taking out that high in anticipation of this July 14th deal, right? That's going to be interesting because, there's a lot of hype around this guy, so we're going to rally potentially heading into July 14th. So there's a lot going on with this stock. It's a doozy, right? There's a lot going on, and of course, trade at your own risk. This thing is extremely risky at this point, and yeah, I'll just leave it at that. So the next one is NIO, another electric vehicle play. This was up 20%, and it went up even more after hours, guys. So this thing was up 25% or something like that. And that is on the back of them completely crushing delivery numbers. They delivered in quarter two 10,300 vehicles, and that's up 191% year over year. And that pretty much shocked investors, shocked traders, and this thing went up again about 20-25% on Thursday. So am I rushing in to buy NIO at this point, guys? Quite honestly, no. I'm being quite honest, right? This is a stock that, if you guys have been following me for a year at least, you know that I've been picking up in the $2, the $3, the $4 range, average cost around, $2 to $3, somewhere around there. So I have a nice base built in my long-term account, but when it comes to my swing trading account, I'm not looking to pick up here at $10. Quite honestly, I'm looking for a pull down. Will we get a pull down? I don't know, right? I don't know, but where we could pull down to, where I'd feel comfortable buying some, swing shares here in this particular stock, and maybe even adding more to my long-term position, would be around more like $7.90 to about $8, right? That'd put us right around that 50 SMA, right around that old resistance from back in the middle of June. If we held that as a new support, that could be a fantastic entry point. But the last thing I want to do, and the last thing I want you guys to do, and by the way, again, I can't say it enough. Do your own due diligence and don't trade based on my opinion. But the last thing that I'd want to happen is buy at $10, $9.80, expecting it to go up to $11, $12 without a pull down, and then it pulls down to $8, and then you're down 20% in the hole, right? So for me, I think being patient with NIO at this point is, just take a look at this 4-hour chart, guys. Come on, it's almost at 90 RSI. So I think being patient with this one is smart, despite the fact that you might leave some money on the table if it continues rallying up to $10, $11. But quite honestly, at this point, guys, I am leaning more towards a pull down for this stock, and I'm just being patient, and I'm waiting for it. And you guys can see, every time it did get overheated over the past couple of weeks, it popped up to $7, pulled down to $6, popped up to $7.50, pulled down to $6.70, popped up to $8, pulled back down to $6.80. So I wouldn't be surprised now that, again, it popped up to $10 if it pulled back down to $8, and that could be a very, very nice entry point. So another one here is FedEx, ticker symbol FDX. They reported fantastic earnings last week. I forget exactly what they reported. It doesn't really matter. All you have to know is they crushed EPS, they crushed revenue. A lot of big analysts here are raising their price targets on this particular stock. So watch out for 155, 150, 155. If this general area holds, I'm thinking FedEx has a decent likelihood to continue its rally up, maybe to the low 160s, maybe mid 160s, and heck, maybe even 170, and that is exactly where the stock has been struggling, at least on this 4-hour chart, over, during the span between October all the way to about February, right? You guys can see we failed around 170 once, twice, 3, 4, 5 times. So watch for that potential fill again up to 170 here on FDX. And another one that's interesting here, it pulled down a bit heading into the close on Thursday, is Upwork, ticker symbol UPWK. This one, very good sign here, very bullish sign here, was when we broke $14, $14.10, roughly right in that area. And this is actually a level we talked about last week, or one of the videos last week. I forget which video it was, but we talked about how, listen, if we break 1410, 1420, it's likely Upwork is going to fill up to 1550, 1560. It didn't fill all the way up to there, but it did get to the middle of this range, right? 1530. And at this point, again, we pulled down on Thursday, heading into the close. We were actually down about 4%, down 61 cents. So this could be the dip that swing traders love, me included. You guys know I'm mostly a swing trader. I do day trade, but I'm mostly a swing trader. So yeah, 1420. 1410, 1430, this could be a very good entry point if we hold this support. And then from there, again, watch the potential fill back up to 1530, 1560, which would be around a 10% potential for profit. And even above that point, guys, I mean, this thing has more room to run. If we pull up the 3-year chart, we see 1420 broke, very bullish. If 1560 breaks, that'd be very bullish as well, to the point where we might be gapping up to, let's say, $17, maybe the low $17 level. So watch UPWK. And another one here is JP Morgan. JPM, this is a banking stock. I'm sure you guys know that. Probably the best ran bank stock out there. Diamond, he's a very good CEO, at least in my opinion. I think he does a very good job. Yeah, banking stocks are risky. Let's be honest. At this point, in this environment, banking stocks are risky. Zero interest rates. They're not making as much money as they were a couple years ago. That's no doubt about it. But we can see that we are holding the uptrend here on the 4-hour chart. We're at a higher low potentially if $93 holds. 92, $93 holds. And what I'm watching heading into this week, if we pull up this 30-day chart, take a look at this downtrend, right? No doubt about it. Yeah, although we are maintaining the uptrend on the 4-hour chart, we're still in a downtrend as well. We're making lower highs as at the same time, simultaneously, as we're making higher lows, and that's putting us in this wedge. So watch for the break out of this wedge. Excuse me, guys. Maybe $94, $95. And from there, I think a lot of bulls are going to come into the stock. And for me to be safe, quite honestly, guys, I'm going to wait until $100 breaks on JP Morgan, maybe like $97, $98 at least, before initiating a position. But at that point, I'm going to be confident that, this thing's heading higher. And for me to add even more money, again, $100 is going to need to break, because you can see back a couple months ago, back in March, April, heading into May even, that was a big resistance right around $98. So I'd be comfortable buying at $98 a little bit. And you guys know when I swing trade, I scale into positions. I don't buy all at once. So I'd feel comfortable buying a little bit at $98. But the bulk of the position, I'd be building above 100, between 100, $105, with a target sell at about 110 to about $115 here. And that is, again, JP Morgan, ticker symbol JPM. And another one here, dividend payer, very solid dividend payer, is AT&T, ticker symbol T. Very similar pattern here to JP Morgan, right? We're making higher lows, right? No doubt about it. On the 4-hour chart, we're making higher lows. The uptrend is there, but we are still under main moving averages. You guys can see we're still under the 180 SMA. We broke momentarily, it seems like, above the 50 SMA, but we're just in between those moving averages at this point. So we need to see a break. If we pull up this 5-day, 5-minute chart, we need to see a break above 30.50, no doubt about it. If we break 30.50, and let me pull up this hourly chart to show you guys, I'm thinking we fill up to 30.80, and the big move is going to come if we break above 30.80 and start to get into the 31 to the 31.50 level, right? At that point, if we pull up, let's say, this 90-day chart, you can see a lot of potential from there. And again, 31.50, 31 needs to break, as that has been the kind of the selling range over the past couple of months. I mean, AT&T really hasn't recovered as much as some of these other stocks ever since the crisis started. I mean, it's gone from $38 to $26. Yeah, it's recovered from 26 to 30, but there's still more upside potential because, again, the high before was around $38. So if we break 30.80, 31, 31.50, my target on this one in the short term at least is going to be around $33. And this is a stock that I'm buying in my long-term accounts right now, my Roth IRA, my M1 Finance account, that you guys, if you haven't checked out the previous episode from Friday, I'll link it down below in the description box. I'm buying a bit in that account as well, as I see a lot of price appreciation ahead of it. And quite honestly, again, they pay a very nice dividend. I'm not sure exactly what it is right now, but it's in the 5 to 6% range for sure. So watch this one, AT&T, ticker symbol T. And another boring, let's just say boring stock that's been hammered as well and hasn't recovered at all, really, literally not at all, is Walgreens Boot Alliance, ticker symbol WBA. And we're talking about this one because they actually report earnings this week. They report earnings on the 9th of July, which I'm not sure what day that is. That might be Thursday. That might be, actually, that's Thursday or Friday, yeah. And again, they have not recovered at all. I mean, this stock was doing bad before the crisis. It's gone from $65 back in November when the whole crisis hit. Let's see what happened. I mean, in the middle of February, heading into March, this thing went from $54 all the way down to $40. It hit a low at about $39. And I mean, it just hit another low at $36 about a month and a half ago. So no recovery at all for WBA here. And same thing with AT&T. This stock here is a very nice dividend payer. And off the top of my head, I don't know exactly what it pays, but it's got to be around 4 to 6% dividend at least for this particular stock. So watch out for the earnings report. I mean, this is not the best setup for swing trade, at least for what I personally look at, but this could be a potential long-term investment for the dividend players out there, right? So watch for Thursday, Friday, their earnings report, what they report in terms of EPS, same-store sales, revenue, and so forth, and just watch for this overall downtrend, right? If it breaks, if we do something like this could finally be the start of recovery for Walgreens Boot Alliance, and from there could be a lot more potential. And another one here, casino stock, a lot of locations around the world, Boston, Vegas, Macau, is WYNN, W-Y-N-N. And this one, very similar to AT&T and JP Morgan's pattern, right? We're uptrending on the 4-hour chart, but we're also downtrending at the same time, right? We're seeing a bit of a cliff dive here in the stock from $110 all the way down to $75, $76, and that makes sense with everything going on right now. We're seeing cases spike back up, and that's another thing I'm looking for this upcoming week when it comes to just the country in general, because this affects the stock market as well. Because if we're seeing more companies shut down, this and that, stores reclosing across different states, this could have an effect on the stock market, no doubt about it. But it doesn't mean that I'm not looking at stocks that could be affected from this. We all know stocks such as casinos, restaurants, airlines, hotels, they'll be affected a lot if things start closing again. But there's always the chance that, we don't close much again. We are seeing cases pushing up here, but if we just continue pushing forward over the next couple of months and things slowly start to get back to normal and we maybe even get a vaccine in the next 6 months to a year, this stock could be back up to the mid-hundreds, 120, 110, 130 at least. So it's a very, we're in a pinch, guys. We're in a very tricky spot at this point with everything going on. And we all know as well, the big funds are rebalancing. So are they going to start moving into some of these laggards? We see, again, the casino stocks, restaurant stocks getting crushed. That is a question that has yet to be answered, and we're going to have to see what ends up happening over these next couple of weeks. But for me, with Wynn Resorts, I'm looking at $80. If $80 breaks, the next gap to fill is around $88, $90. From there, maybe the mid-90s. So there's a lot of potential with this stock, but there's a lot of risk as well. Again, if we end up shutting down, they start shutting down locations. Less people are going to Vegas, all these different spots where they have locations. That's not going to be good for this particular company, and thus the stock might be going down along with it, at least in the short term, right? Long term, it should be fine, but we're talking about short term in this particular video, right? So the last two that I want to go over, Tesla, just like NIO, guys, Tesla, I think, is pretty overbought. This could be maybe a short potential play, and by that I mean the stock could go down in this upcoming week. Maybe we can short it. Maybe we can play a put option. Does that mean I'm a bear on Tesla? Absolutely not, right? But we can see, again, it's pretty overheated. We hit an all-time high at 1232. And that's on the back of, let me pull up my notes very quickly, that's on the back of 90,650 units being delivered in quarter two, and that crushed the 72,000 estimate, and 75,000 of those vehicles, honestly 76,000 of those vehicles were Model 3s. So we got very good delivery numbers from Tesla, same thing from NIO, and they're in a very similar scenario now. So for me, I'm looking at Tesla as a potential swing trade entry at $1,000, $1,050 to $1,100. That general area of $1,000 to $1,100, right? Because if it starts to pull down, this is, it's funny, guys. This is the type of stock, it's like a cult, right? Every time Tesla pulls down, it seems like, no matter what the valuation is, and by the way, valuation is kind of hard to value Tesla anyway, but no matter how big the company gets, people still buy the dips, right? Again, it's a cult stock. It's kind of like Apple in a sense, where they push up the stock, they bid it up, and push it to even overvalued levels, and people continue to buy it. So Tesla could be that. Again, anywhere from 1,000 to 1,100 is where I'm looking to initiate a potential swing position here. And if we go even lower than 1,000, guys, that'd be better for me. I'm not sure if that's going to happen. I doubt it, quite honestly, with how things are looking right now. But if we go under 1,000, another nice price target could be 900, maybe 920. But again, I could be dreaming, guys, because I don't think that's going to happen with how Tesla's been moving over these past couple of weeks. It's absolutely unbelievable. So the last one here is Boeing, ticker symbol BA. Very similar, again, to the JP Morgan pattern, to the Wynn pattern, to the AT&T pattern. We're uptrending, and we're also downtrending. We're in this wedge, right? We're in this wedge, and we're in a pretty interesting spot. I mean, we're right around 180. 180 has been holding pretty nicely, at least over the past couple of weeks. I mean, we did break it momentarily from the end of June heading into the beginning of July, but ultimately on Thursday we ended up holding 180, and you guys can see on, what day was this? On the 29th of June is where we ended up gapping out of this wedge. So for me, Boeing at this point is looking pretty bullish, quite honestly. And for me to get into it, I need to see a break out, a definitive break above 185 and a head towards the 190s. At that point, I'd be confident in going in because bulls will start to kick in. That's going to be showing me, okay, they're bidding up the stock. Bulls are starting to come in. And we can see the ridiculous volume in general here on Boeing over the past couple of weeks. So if we get volume and we get that momentum, we might be pushing up, again, mid 180s, 190s, and that's where I'm looking to initiate a position anywhere from there to the 200s. And then honestly, I'm looking to sell from 220 to 230. That's kind of where we topped out back on the 8th of June. And this is a stock, guys. This is a company that is not going anywhere. I mean, we saw President Trump. He was like, there's no way we're going to let Boeing go bankrupt. And if they get into a deeper hole, I mean, they're just going to get more money. They're going to get more loans. They're going to get more, stimulus. They're just not going anywhere. So if you see a company that's being loaded with printed money, loaded with all of this, cash to maintain them in the short term, that's going to push the stock's price up. I mean, we understand that at this point, and that's kind of what's going to happen here with Boeing. And on top of that, they're starting testing with their 737 MAX, which I believe is starting tomorrow. I think that's Monday through Wednesday. They're going to be doing 3 days of testing when it comes to this new 737 MAX, so it can maybe get back in the air over the next couple of months. We'll see how that ends up playing out. So overall, guys, that is it for this video. If you guys enjoyed it, as always, hit that like button for me. Consider subscribing to the channel if you want to see further content like this, and drop a comment down below. Let me know the top 5 stocks, top 3 stocks that you're watching this week. I'd love to know, and your thoughts in general when it comes down to the stock market heading into this week. And don't forget, if you guys want to be further connected with the Strive Smart community, check out all the free links down below. We have a Discord chat. I don't even know how many people we have in there. It has to be over 2,000 at this point. We have a Facebook group as well, and you can also get 2 free stocks from Webull, one of them valued up to $1,400. And the way you get them is open an account using that link down below in the description box, put in $100 into the account, and wait 5-7 business days, and that is when you get your 2 free stocks. So very easy. It's free money, and again, link down below. And yeah, that's pretty much it for this video. I'll catch you all in the next one. Good luck this week. It's going to be a very, very fun week in the market. Stay safe as always. Peace out. How's it going, everybody?